Good morning. This is Wednesday, February 22nd, 2023, and it's 7:30 a.m. Pacific Standard Time. So it looks like the markets continue to go down. The ES just hit a very important psychological barrier, which is 4,000, right about there. And so I don't know why they have these psychological barriers. I remember when the Dow was trading at 2,000, they said it was going to go to 2,000 was a barrier, 3,000 was a barrier, 5,000 was a barrier. So they're just psychological numbers. And now this one's broken. And so I guess a lot of people think that once it breaks that, we're back into a bear market. But we've always been in a bear market since the beginning of 2022. But I guess a lot of people just didn't want to face that fact. But anyway, that's what's happening. So now we're back down again. It looks like the Nasdaq's down. Like I mentioned before yesterday, that I had purchased some more put options. And so now I'm in the money. I'm staying with my position because I see this market to continue to go down. Usually when a market goes down like this, it goes down the way it did yesterday for at least 2 days before it starts to retrace. So when I say retrace, it doesn't mean that the market is going to come all the way back up here. I mean, it could, but that's not what I'm talking about. When the markets usually come down, they'll hit a certain point and they'll retrace a bit. They'll come down, they'll retrace. It comes down, it retraces. That's just a normal way the market works, because you're buying all the way up and now you're selling, and then you're buying, then you're selling, you're buying, you're selling. So that's, like I said before, this is a buy-sell game. That's all it is. So I did a Fibonacci from here to here, and retracement here is about 50%. And like I said before, it could be anywhere between here and here. So this isn't 100%. It probably isn't even close to 100%, but it's just something that I use for just to give me an idea. Anywhere between here and here, it usually retraces. Now that's from here to here. There's also another Fibonacci from here to here, and that would bring it down into here. But in the meantime, the market usually heads down about at least 2 days before it starts to retrace. Sometimes it goes down, even for a week it can go down, but usually about 2 days. So this is a daily chart. So you can see here, this was the beginning of the bear market down here, and this is where we're at now. So I would assume the market's going to continue down. It's going to retrace in here. Again, since it broke out of this balance area, if you're long term, you can just hang on to it and just wait till it goes all the way down till you sell it. But you want to buy far enough out, at least at a minimum of April. And if it takes a longer time and it's getting a month before expiration, you can always trade them in and get, June's or whatever, how long this thing takes. And that's one way you can trade this. You just write it down and you can make some money that way. I would advise people not to get greedy because, of course, there's other ways of making money and even more money. But if you want to be kind of conservative about that and make a pretty decent living, you can do that. One thing good about this market is there's opportunities that come all the time. There's never a lack of opportunities. So you always see these, you see these balance areas come up, and even if you don't see a balance area that's defined, then you've got these spikes that you can trade too. There's always something. There's always some kind of pattern. Here's a good. That was a good trade. I remember that one. So there's always a pattern that develops, and even if you only get one of these really cool patterns once a month, and you trade, that's actually good enough, because in here, if I were to buy, just giving an example, if I were to buy 10 put options going down, and I bought them, way out of the money, where they're actually not going to make a lot of money quickly, because I like to buy at the money, or at least really close to the money. So this way they gain value very fast, or they'll lose value very fast, depending on if the market goes against you. But let's say in this scenario, this market is going in the direction you want it to go, and you buy options. So of course, when it gets down to here and you buy options pretty far out, you're going to make some money. But the idea is, when it starts to break down like this, you want to buy more options. Instead of 10, you might want to buy 20, 30, 40. And if you buy them in the money, by the time the market gets from here to here, just this short little bar here, you can make $30,000. Just to give you an example, on 30 options. You can do that. It's very possible that can happen. And then that's usually how I trade. I'll just wait for some of these big moves, and then I'll put a lot of money into it. And then, even though it makes just a little move like that, you can make a lot of money, which would be equivalent to somebody trading smaller and riding it from here to here. So if I wanted to, I can just ride one bar down, make a lot of money, get out, and then wait for another bar to get down. I mean, there's so many different ways of trading this. You just have to find out what's good for you. For right now, at least this is for me. This is the way I trade, and you should trade the way I do, because it might not work for you. Chances are it probably won't. But anyway, I'm just giving you an idea of how these markets work, and then you can decide on how you want to trade them. So, so the market's here. Now, sometimes what I like to do, actually often, is when the market comes down and it looks like it's going to retrace, I sell, and then I wait till it retraces, and then I'll buy again, and it comes down. Now, it's pretty tricky. Most people don't do that, because it requires a couple things. One is timing the market, and the other is finding where the bottom or the top is. And if you talk to any trader, even seasoned traders, it's not an easy thing to do. In fact, most people are going to lose money trying to do that. So they don't do that. They just do what's called dollar cost averaging, or they just hang on longer term, which is way safer. But in my case, I like to do this only because I don't like to time the market all the time. I just wait for it hits these balance areas, and of course, when it hits these balance areas and it breaks out, it always goes in that direction. Even though it came up and it came back down here, so you didn't gain any value. You started gaining value here when it went up. Same thing with this. It broke down out of a balance area. This thing here, not much of a balance area, but it did this nice little spike and came up. So that's a good indication that it's going to go that way. Same thing with this. It did this little spike, and then it went down into this balance area. Not a big move, but like I said, if you start putting a lot of money into what I would call maybe a 90% chance it's going to do that, then you can make some big money. You just can't get greedy and stay in the position where eventually it's going to lose, because that's what these markets do. They go down, they don't continue to go down, and they don't continue to go up. So if you study these charts, you'll see that there is some consistency in these things. Like this market just didn't go straight down. It went down, and it kind of went up a little bit here, and then came down, and then it just shot down. So you don't get these kind of moves very often, but you'll get moves like this, where the market goes goes up, it comes down, and it kind of sits around here a little bit, and it goes up, and then it shoots down, and it sits around. So nothing comes straight down, is what I'm trying to tell you. This thing came straight down, but then it did, several days in here, and then went down. Okay, so so that's what you get. That's how the markets work. They're very consistent as far as that goes. You have to learn how to read these markets and look for certain patterns. Like I said, these spikes, like these, and also balance areas. That's how I trade. There's more to this than that. There's also time, the amount of time it takes to get from one place to another. Like there's a certain amount of time it took from here to here and to get back down here. There's an amount of time right in here. Same thing with this. It's pretty consistent with that. And so from here to here, if this market comes down into this area, then it's pretty consistent with the rest of these as far as how long it took to get from point A to point B and then back to point A again. So it's pretty consistent. I do expect that one of these days, I don't know when, maybe June, we're going to have some pretty big drops coming down, which is highly unusual. Those only happen like once every 15 years, let's say, whenever we have a recession and a correction, then you're going to get those big drops once in a while. But even with the big drops, see if I can find. So here's a big drop like during the pandemic. The market went straight down here. I'm sorry, that's not it. What am I doing here? Right here. Okay. Market just went straight down, and then it came back and went back up. So it didn't. I'm sorry, it didn't come straight down. It looks like it did, but it took. These are all days right here. That's how many days it took to get down there. So if you look at a weekly chart, each bar is a week. It took 1, 2, 3, 4, about 5 weeks to get down here. So it took a while. It took a little over a month to get down there. So like I said, nothing comes straight down. I mean, this right here looks like it came straight down, but that's a whole week in there. So you have time. That's what I'm saying. You have time to prepare for these things. As opposed to the market just going straight down one day, straight up the next day. So there's time. And even during a crash like this, which I believe we're going to have these days coming up again in here. But still, like I said, you're going to have some time to make a move, to have a choice of what you want to do. Problem is, a lot of people, when the market starts to crash, like right now the real estate market's not doing so well. There are a lot of markets that aren't, but people aren't paying attention, and by the time it does hit bottom, then it's already too late, which they actually had plenty of time, but not too many people, very few people actually look at what's really going on in the markets in general. So unless you don't care about your finances, then you don't have to pay attention to this. But if you do, then I would make this a priority on how the stock market works, because everybody's invested in the stock market. If you have money in the bank takes that money and invests in the stock market or real estate or whatever. It's all invested. If you have money in your pension fund, it's the same thing. Money just never sits there. That institution takes that money and invests it. So you're going to be invested. If you invest in a CD, it's the same thing. All that money's invested in the stock market or real estate market. The point is, it's invested. So you're invested either way. So you might as well do it yourself, and this way you have control. All right, so that's it for today. I'm just there's nothing for me to do. I don't have alerts here because I highly doubt that this is going to go back up to there. So I don't really set. I could set alert if I wanted to. Like let's say right here. Uh, there, and I can walk away from this. You know, I don't have to be here. You know, I can go travel. I can do whatever I want. I don't need to be here. I just need to be close to or within an internet connection. That's it. But I'm pretty much done. I'm just waiting now. And tomorrow, let's say it comes down to here, or it doesn't do anything. It just sits here. And then finally, let's say it just comes down to here, or even down to here, without correcting. Then I can choose what I want to do. If I want to wait till it corrects and comes back up here, and then keep writing it down, or sell, come back up here and figure out where the top is in that correction, buy again, and then write it down. So those are the choices I have, but I can't tell you right now what this market's going to do because I don't know. The only thing I could tell you is I feel very confident that the market will continue down. And that's it. Okay, so we'll talk again tomorrow if anything comes up.